All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny. That guy
I'm
drinking water
Dylan.
is
That was
Dylan.
bad timing. All right.
Nothing but professional production here. All right, guys. Well, today we're going to talk about the recent passage of the $1.9 trillion stimulus package, how each of us would invest our stimulus checks. So I actually, it's going to be interesting. I know Dylan's seen my picks, but I have not seen his, so we'll see what happens.
Let's just say yours is more well thought out.
Yeah.
Yours is.
Yeah, these are all real companies that I'm actually looking at putting money into right now. So, very reasonable. The other thing I want to add too is, obviously this is only if you already have taken care of your basic needs stuff. If by all means, if you have any credit card debt or need to, pay for your rent or mortgage, that sort of stuff, that comes first.
Yeah, credit card debt always first.
Yeah, exactly. That's a guaranteed like 15% rate of return, which is probably better than most of these stocks. So,
yep.
Yeah. All right. So, first one I was considering here is a little bit more money for Uncle Warren.
Such a fanboy.
I know. The market has finally woken up a little bit. It's finally starting to give him a little bit of little price action. He's been stagnant for a while. I've owned Berkshire Hathaway stock for a few years now. I'm up, I think 40% right now, but it was pretty stagnant for a while. I'm considering actually even adding to the position. Recently saw kind of an interesting analysis that gave it a 2030 price target of $849 a share for the Berkshire B and like 1.2 million for Berkshire A class. So that's why I was like, man, I'm like, I guess I wasn't putting enough money into it. Obviously there's some risk here with like Warren Buffett being 90 years old, but
some risk.
His name is very recognizable, but I think the company he's built is a resilient cash producing compounding machine, and it'll continue to run for decades without him even.
I agree. Worried that he's 90 and then his right hand man is like 94 or something. 97. Jeez.
Yeah. Buffett loves to tell stories about a lady they work with that retired at like 103.
That's ridiculous.
Yeah, no, it's pretty gangster. All right, so the next one I was thinking about is AbbVie. It's a recent pickup of Berkshire Hathaway, recent investment there. Company is getting a slight discount because they have a kind of revenue cliff coming up here in 2023, where the number one drug, Humira, falls off patent in the United States. However, their kind of two secondary products look like they can pick up a fair amount of the revenue there, at least. So I'm inclined to put a little bit of money into them. I've been looking at this stock and following it for a while. I also pay a nice 5% dividend, I want to say right now, so pretty juicy. But I figured pick up a couple shares of AbbVie there.
Pretty juicy, 2 whole shares.
Yeah. Well, it's $1,400. You spread around a little bit.
It's true. Wait, isn't this based off of 3,800 or no?
No, my price prediction for this in 2030 would be that.
No. I thought that you were doing. Are you investing your and your wife's?
No, this would be the $1,400 would turn into 3,800 in 10 years. Yeah. That was my thought process, at least. Yeah. So, anyways, the other one I've been, man. I have some interesting moral reservations about Facebook. I'm not a particularly moral investor, but still. Like even they give even me the willies a little bit about how much they know.
They know a lot.
Yeah, exactly. But financially, they're just like a money printing machine. It's kind of phenomenal. Yeah. I think there might be an opportunity to get them in a little bit cheaper if the Biden administration makes any moves against like these large tech companies. That Facebook is priced right now for that to happen, but if it does happen, I think you might get a nice buying opportunity. But anyways, so like $240 price prediction for 2030 based on analysis I read as well.
They're actually quite attractive swing ways. They didn't make the final cut because they start off at like 200 and I go down to 6. They were like 10th. So
interesting.
Baba almost made it too.
Yeah. Baba's another one too. I've been looking at this stock for, I would say, almost 6 months now. I definitely have some reservation based on them being located primarily within the People's Republic of China there. So there's a little bit of a discount you got to give yourself there. But if you look at the financials behind this company, it's also like a money printing machine. Like 2030 price target for quadruple what it is now, which is pretty insane. But it's possible, right? There's a large growing middle class in China, and Alibaba is well positioned to take advantage of that.
And they've gotten hit like hard over the last like 6 months.
Yeah. I mean, this is cheaper than it was selling for in like June. I want to say it was around 230, 240 a share. And there's obviously some big names in this stock. I think it was Stanley Druckenmiller I was looking at moved into that stock around that time.
Yeah, they were at 320.
Yeah. And then another one, kind of rounded out a little bit here is ticker symbol T, AT&T. They just had their investor presentation, 2021 this week. And, they still have some struggles ahead of them. They have a lot of debt on their balance sheet, but it looks like the HBO Max product is starting to pick up a little bit of steam. That Warner Media move where they're releasing all their first run movies like on it this year may help push them a little bit in terms of their growth. So I'm actually happy to see that. And they're so cheap right now, basically, with a 7% dividend yield. It's pretty crazy. They're more than 30% down from where they were pre-pandemic, and they're actually still doing relatively well. Like, people still paying their cell phone bills. People they are signing up for HBO Max because people are still spending more time at home. So I think they're, relative to the rest of this kind of frothy market, they're still a pretty good value.
Pre-pandemic, $40.
Yeah, exactly. It doesn't make a ton of sense to me. I own a tiny bit yet of this right now. So all in all, I'd spend about $1,274 in stocks right now, and then I predict 2030 that portfolio will be worth about $3,800. So pretty solid return. It's about 10% per year, which is about market. But I think these are all good companies in their own rights, and I'd be happy to own any of them. A couple other things you can kind of do to round out the $1,400 stimulus check there. Always investing in yourself. Never forget that. This topic of financial modeling for equity research, I actually just ordered. I haven't read it, but it's something I'm looking to get a little bit more into the nitty gritty about, like valuing companies. So I think it's had good reviews. Snowball, great book about Warren Buffett. If you're going to read one book about Warren Buffett, I think this is the one to read. Just kind of tells his life story, a little bit about business and stuff like that as well. So you kind of get the idea of who the man is and how he approaches things. So get into his mindset a little bit. Intelligent Investor, another great investing classic, written by Benjamin Graham, his mentor there. This one I've read. It's pretty nitty gritty, I guess, and it's pretty old, out of date, but it still carries enough weight that it's worth reading. It's not going to teach you things about today's market per se, but a lot of the principles still hold true. Speaking of principles, Ray Dalio is another famous investor. I've actually never read his book, but I'd be interested in picking it up. So I have to put that one on the list as well.
I do agree with the books. I have a rule where I spare no expense for buying books and healthcare for my own healthcare, because I cut costs everywhere else for like lunch and all that other stuff.
Yeah, so. Makes good sense. And then this is one I thought was a little interesting. I got another $45. I was going to try to find a stock that pick up one more share of AT&T. But it's always important to, as much as we're long-term planning for our financial well-being, you have to still enjoy the here and now. And the people you have around you are really help, aid your sanity. And it's important to keep them in mind. Sometimes you just have to go out for your fiance's birthday party and not feel so well the next day. Right, Dylan?
That's a dig at me. And this is going up very late because I have been very hungover for 8 hours. So yeah, thanks, Vinny.
It's all right. It's important, man. You got to do that stuff still. That's the point. I'm sure she appreciates the company.
Jeez.
All right, now this is gonna be interesting. This part I have not seen. So what would Dylan do?
So none of anything you just said.
Okay.
I actually think what I'm gonna do, I think that we should both do this, is because you do Webull, right?
Yeah.
So you should do a Robinhood, put $1,400 in it, I should do a Webull, put my $1,400 in it, and then just like compare every month. Because
Yeah.
I'm going to be, because here's my philosophy. This is free money, and I'm fortunate enough that I'm not relying on it. I don't actually need it. So because of that, if you need it, like Vinny said, don't do anything I'm about to do.
Yeah.
I'm going to be ballsy as hell.
Yeah. GameStop options expire next Friday.
Options will be a big part of it, not GameStop.
Oh God.
Now let's go to the next slide.
All right. Going to the moon, baby.
Yep.
I love it.
So like I said, completely free money. I'm gonna do so in my swing trade videos, I do low risk for Vinny, medium risk, which I do a lot, and then high risk. All my high risks have been doing like really well. So I'm gonna just put all of it on that, and we're just gonna see what happens.
Yeah. Oh, is that it? That's the end of the
That's
slide?
it. No, no cool pictures or anything. I would say I would buy books, but I went through I bought like 12 investment books, and I just go through like phases where I buy a bunch and then I read them all. I have 2 left, so
yeah,
I know those 2.
I know. Some of them just can't hold your attention. There's one I tried to read like 3-4 times.
Was it the new day trading for a living?
No, actually, I've never picked that one up.
Oh, that one, because that one, it's rough.
Yeah,
it's basically 90 pages of him saying the market's emotional, just over and over.
Yeah. Well, speaking of market emotions, tune in for our next video, a little analysis of a stock loss. Pretty emotional.
Very large loss.
You might see some tears. Well, I'm just saying.
Yeah. All right, guys. Thank you.
Yeah, thank you for joining us.